our thesis is that we can make affordable housing possible by also making it profitable. And if we make affordable housing more profitable for the underlying providers and those real estate entrepreneurs that by the thousands are changing our communities every day, that they are much more likely to go create that affordable housing opportunity.
You are listening to the Millionacres Podcast. Our mission at Millionacres is to educate and empower investors to make great decisions and achieve real estate investing success. We provide regular content and perspective for everyone from those just starting out to seasoned pros with decades of experience. At Millionacres, we work every day to help you demystify real estate investing and build real wealth. I'm Deidre Wollard, editor of Millionacres. Thank you so much for tuning in. On today's show, I talk with Padsplit CEO and founder Atticus LeBlanc. Padsplit is a platform that maximizes rental property value by putting multiple tenants in the same home. In our conversation, we will discuss affordable housing, how investors can create additional value, and why Padsplit decided to become a B Corp, and how it balances profit with social good. Hey Atticus, how are you?
Doing great. How are you?
Doing good. So to get started, if you could just identify yourself and explain a little bit about Padsplit and what you do.
Yeah, absolutely. So my name is Atticus LeBlanc, and I am the founder and CEO of Padsplit. At Padsplit, essentially, to boil it down in a nutshell, we move strangers in together to make housing both more affordable for the residents most in need and more profitable for the housing providers who are most likely to be able to provide those opportunities.
Excellent. Thank you. So one of the things I was most interested in about Padsplit is that you are a B Corporation, and I was wondering if you could explain what that means and also why you decided that that was important for Padsplit. We haven't seen a lot of real estate companies make that move.
Yeah, so technically we're the technical term is a public benefits corporation, and that was important for us for a number of reasons, but namely because when I founded the company, my idea was to be mission driven and to create a legacy for positive change in the world, and so I knew that if this were anything like my other ventures, there was a chance that I would not be at the helm forever. And in order to kind of create that legacy in a lasting way, we also wanted to make that public benefit part of the charter. And so what that means is that as part of our charter as an organization, we have to provide housing for people earning below 80% of the area median income. And so that means that if someone were to offer to buy the organization, then they would also have to be aligned with that mission in addition to being the highest bidder.
Interesting. Thank you. So obviously affordable housing is a huge issue. It seems to be becoming even more of an issue right now with the COVID-19 pandemic and so many people being out of work. Has COVID-19 changed the outlook for Padsplit? Have you seen changes with the individual houses?
Sure. So the biggest impact for us has actually been on the financial side. What's important to note is that the way that we look at housing and our target population is primarily low-income workers. So folks who are earning less than $35,000 a year, and our average income is around $25,000. And what that means is, specific to COVID, we're talking about a lot of those frontline workers that everyone is looking at now, folks who work in retail or administrative positions, the barista at your local coffee shop, the cashier at your grocery store, et cetera, who are often confronted with the real risks of COVID on a regular basis. But also the bigger aspect for us was the financial risks, and that slew of job losses that we saw early on were incredibly impactful for our business as they were for many. I'd say what came out of that, interestingly, in the way that we're set up, we recovered much more quickly than I think most housing sectors did, and have consistently outperformed the apartment industry as you look at collections and move-ins and those types of things. And from a health-related aspect, it's the reality is these folks just don't have any other options. And so if you're choosing between living in your car or functional homelessness or skipping around from friend sofa to friend sofa versus being in a stable, secure location with access to running water and plumbing and the ability to take a shower and sanitize and all of those other health measures that we put into place, this is a far better option than anything else that is out there and realistic. The other thing I would say is what's important, and hopefully will be a lasting change of the COVID-19 crisis, is this focus on systemic inequality and how that has affected not just every aspect of our society, but specifically housing, and how now we're under this eviction deluge, but how that's disproportionately affected minorities and populations of minorities, not just in Atlanta but around the country. And I think as an organization that strives for economic uplift and being able to provide opportunities for people who, regardless of what their starting point is, have the opportunity and access to the opportunity to find stable housing that creates savings that can then eventually build income and build wealth, it's as important as it ever has been, if not more so.
Definitely. The eviction moratoria, it's been a confusing situation because obviously cities, states, nationally, there have been a bunch of different rules, and now a lot of eviction moratoria are expiring. So I wanted to talk with you a little bit about your rental property owners and what they've been experiencing in this. Have they seen people leaving more, or more people being interested in doing pad split? What are you seeing?
Yeah, so and I think it's important to highlight as well that when I started the company and created the idea behind the company, it was really intended to be counter-cyclical in many ways and prepared for the next downturn in the cycle. No one expected that it would be from COVID-19, but as I designed the operation of the business and the target population in 2017, we had some event like this very much in mind, because my background was starting a company in 2008 through 2012. And obviously in some ways it was a similar period, if not even more disruptive in the real estate industry. And two things happened then, and I think we're likely to see happen now. One is that demand increases, right? If we are offering the most affordable housing option available, then as incomes get compressed, we see demand for those more affordable options increase. The second thing that's likely to happen is just with the increase in volatility, whether because of job losses, you obviously see increased rates of evictions and increased churn in the population overall. And so far, we haven't seen quite as heavy churn. Actually, churn for us has been a little bit lower. But I don't know. It's too early to say if that's just because people are hesitant to move, or are just kind of hunkering down, or if it's because we've gotten better about providing better move-in experiences or anything like that. But yeah, those are really the two things that I think are likely to continue to occur is demand increases and churn will eventually, at least on a macro scale, tick back up.
Interesting. So would you define pad split as being part of the co-living trend, or is it really different? See, we've seen a lot of co-living is mostly urban, young millennial, sort of catering to the other end of the market. Where do you see pad split fitting in there?
It's funny you say that. I mean, most people would categorize us in the co-living category. However, I hesitate to use that word, and I use shared housing, right? I mean, the reality is shared housing has been around forever, and I, as a property investor landlord, first had a shared home in 2009, long before the term co-living was ever coined. And whereas co-living, in many ways, has taken on this aura of newfound, like whether it's young millennial professional fad, what we're doing is cater to a very different population. Our average age is around 39, and the range is anywhere from 19 to 83. So it's a much broader segment of the population, and it's also targeting lower income. And as you look at the different providers in the co-living space, we're just in a different category entirely in terms of the population that we serve. As well as if you look at the demographic breakdowns, there are 14 million singles and couples in the U.S. that make less than $35,000 a year, whereas there are 9.5 million that earn more than 50,000. So it's a much bigger market. But right now, we're really the only organization that's targeting that lower income demographic, even though it's much bigger. I think in large part because it's also much harder, right? I mean, we can't screen based on credit score the way that most co-living companies do. We can't screen based on income the way that most co-living companies do. And so we have to invent different ways to screen for high quality residents in ways that most typical apartment providers, landlords, and what you would define as a typical co-living company, they're not able to do, and it's a lot harder to do.
Interesting. Could you explain a little bit more about those different techniques you're using?
Sure. Yeah. So it has a lot more to do with the model itself and the operating model than it does the screening criteria. An easy one is thinking about when bills are due. So if I were to ask you, what day of the week does September 1st fall on? I would be very surprised if you were able to give me an answer without checking your calendar. And as I ask that question to any large audience, no one has it on the top of their head. But the reality is the entire rental industry banks on the fact that regardless of what your income is, you are going to budget around that date. And if everyone gets paid on a Friday, I mean, I know today is Friday, right? And everyone knows today is Friday. And so if we orient our billing system to make it as simple as possible and to create a very powerful habit of paying on Friday, we're much more likely to get those payments. On top of that, you layer in not just the frequency of those payments, but what other services are added on there. If all of your utilities and your Wi-Fi and your health insurance, parking, if every fee that you can think of is baked into that same payment, it is much more likely to be made on a consistent basis. And so that's a big part of what we do is all-inclusive weekly billing, or it's tied directly to your pay period. So if you get paid every 2 weeks and that's every second Thursday, that's fine. We can set your billing to every second Thursday. What that means though, for a landlord who has absolutely no interest in chasing down collections on that regular of a basis, particularly if you have 6 people in a home, and rather than chasing down 30 payments a month, what you really want to do is get that one payment. And so that's where we come in, and make this shared housing opportunity much more scalable for those owners who are much more interested in building wealth than they are in chasing down individual collections efforts. And in doing so, I think that is probably the single biggest factor for how we are able to outperform the apartment industry on a collections basis, even though average credit score of our folks coming in may be 490, right? And then on top of that, also adding in some carrots and sticks around, we do credit reporting so that we can demonstrate for our incoming residents how when we report those payments that occur on a weekly basis, if they make them on time, they're likely to see, as their previous cohorts have, that their credit scores will increase more than 100 points over the first 3 months. And so by aligning those incentives between members who want to achieve financial stability and build their credit with owners who are looking for consistent payments, we're able to get much better results.
Wow, that is a big difference and a big service for those renters. So in terms of how a landlord would go about configuring their home for a pad split, are there any other changes that they have to make?
It really depends. So as we look at the different housing providers that we work with, in some cases it's just an individual homeowner who has an extra bedroom or two in their house. I even rent so we have a basement bedroom that opens to the driveway, and we have a pad split resident who's lived down there very unobtrusively for the last 4.5 months. But our primary source of units comes from single family investors. We have some multifamily units as well in traditional apartment complexes, but in those cases, it really just depends. What I'd say is around the alignment of incentives, our thesis is that we can make affordable housing possible by also making it profitable. And if we make affordable housing more profitable for the underlying providers and those real estate entrepreneurs that by the thousands are changing our communities every day, that they are much more likely to go create that affordable housing opportunity. And the way that we do that is, if you think about a traditional market scenario, the first bedroom in any landlord, for any landlord, is the most valuable. And there's diminishing returns from there in a traditional market sense. The second bedroom is worth a little bit less. The third bedroom is worth a lot less. Fourth and fifth are almost worthless, right? Whereas for us, if we can bill about 50% of the cost for the first bedroom, but then replicate that same number over and over, you reach this tipping point. And so what happens is there's no requirement for owners to increase the bedroom count, but if they were going to buy a 6-bedroom house versus a 3-bedroom house, they're much better purchasing that 6-bedroom house. And at the same time, if you have a formal dining room in a rental property, you're not getting paid for that, right? There's almost zero monetization for a home office or a formal dining room. And so what we'll see is, because those incentives are aligned, those investors will go ahead and convert those spaces, so that now that formal dining room, which before was wasted residential space that could go to help provide this massive gap in the affordable housing supply, if they can make $500 a month from that space that was formerly worthless, then they go ahead and make those conversions. The biggest thing for us that we require is just around safety, particularly fire safety, and ensuring that any bedroom that is created or convertible living area that is created has fire egress, has a smoke alarm inside that room, and all of the other necessary code requirements that would be necessary for a sleeping area.
Interesting. So one question I have around that, I know that you are based in Atlanta, and I believe most of your pad splits are in the Atlanta area. I saw that there was a new legislation coming out around the types of housing and what Padsplit has been doing. Are you seeing that as a potential concern in other cities? I know Airbnb and others have certainly had a problem with some cities in terms of short-term rentals. Do you see that this is an issue for zoning if you've got single-family housing, but you've got multiple residents living there?
Sure. Yeah, I think it's there are 2 points. One, it's a question of trade-offs and opportunity costs. Number one, and then the other point is just a moral one, which, do you believe that the workers who serve our communities also deserve the opportunity to live in them? Should the cashier at your local grocery store have to travel an hour and a half each way to be able to find a decent place to live? And so in most cases, the answer to that is no, although very few people are willing to answer that question honestly. With regard to the trade-offs, if you think about what we spend today on affordable housing creation to actually create units to house those workers, the low-income housing tax credit program nationally has been far and away the most successful. If you look nationally, it's about $209,000 just in public subsidy of taxpayer money that is required to create one bedroom apartment, which means that if you look at the roughly 1,000 units that we've created with no public subsidy, we've saved those taxpayers $203 million just in upfront capital cost, not including any sort of ongoing subsidy that would otherwise be required. And so if you believe that we need a workforce, period, full stop, then you have to house those people. And your choices are, you can pay for that housing creation. And oh, by the way, like, we have a gap that's largely stated around 12 million units today across the country. And low-income housing tax credits have created 3 million in the last 30 years. So do you want to wait 120 years to create and spend gobs of money from taxpayers to create those units? Or do you want to capture 1%, literally, of the existing residential space that's already created? And which of those two choices do you prefer? And so as we think about how you answer those questions, or at least how you have those discussions, it's very much in line of pick your poison, right? Which one do you choose? And does it really matter if you have 6 people in a home that are related versus unrelated, because all of those codes are based very much around racial segregation starting in 1917. And everyone acknowledges that it was okay to live with college roommates, and it's okay to do it when you're in a retirement home, but for some reason it's not okay between the ages of 22 and 65. And I think it's just pulling back the curtain on a lot of those long-held assumptions and determining, well, is it really that it's not okay for 6 unrelated people to live together, or is it a question of creating equal opportunities for people most in need? And can we ensure that these 6 unrelated people can live together and it doesn't decrease our property values, which is factual, and that the grass is cut and that the house looks neat, and so forth and so on. And I think it's a much more productive conversation to address those substantive issues as opposed to the ones of, well, are you related or unrelated, which is really the space that we're in today.
Well, that's true. I think there's a little bit of sort of knee-jerk NIMBYism on some of that. So for Padsplit, when you're planning on expanding and entering new cities, what sort of conversations are you having? Do you start with the investors themselves? Do you start with the city? What does that process look like for you?
It's a both and. I'd say as we look at expansion, the most important partner is the housing provider. And as we've gotten interest from other areas around the country, those markets that are most appealing to us are where we have had interested, capable, professional, upstanding, and high integrity investors that reach out to us that say, yes, I am interested in increasing my returns by more than 80% and doing something good. And in those cases, those are our most successful investors. And right now we're averaging greater than 80% returns on NOI, increases in NOI across the board. And so if we can get one of those investors to try one, then that's the best starting place for us. And in most cases, if you have a city or a county or any sort of local governing authority that is interested in and acknowledges that they have an affordable housing need and they are interested in solving it, then that's usually a good starting point for us.
Interesting. So are you targeting more the single family or more of the multifamily, because you can do more pad splits within there? Is there a preference there?
No preference really. I mean, it's the typology is almost irrelevant, and of course it's differentiated from geography to geography. In New York City, for instance, now there's a whole other set of layers of bureaucracy there, but there's actually a tremendous amount of additional housing supply available in New York City, even though you would think that is a very efficient market. Right, there are different regulatory challenges there, but it looks way different than Atlanta, right? And is multifamily and brownstone. But I think from city to city, the type of home doesn't matter as much as is there an opportunity for wasted space to be captured and utilized by those housing providers. As another example, like a Phoenix or a Houston, San Antonio, Dallas, Orlando, Charlotte, all of those markets look a lot similar to Atlanta in terms of more traditional single-family stock. But there's absolutely no reason that as you look at more dense markets in California, for instance, that it's not an ADU, an accessory dwelling unit, or a homeowner who has extra space. We've seen several examples, even here in Atlanta, where people have moved through the continuum, where they came to us, they had a room, they saved enough money to be able to go out and either rent a place or in some cases purchase a home. And now that they've purchased those homes, they are renting those rooms to cover their mortgage and make a profit using the Padsplit platform. And so that's the virtual cycle that obviously we love to hear and love to see. And I think is certainly possible in just about any jurisdiction.
That's really a great story. So just to wrap up, Padsplit in 5 years, 10 years, what's your goal?
So our goal is to create a world-class marketplace that is literally solving the affordable housing crisis one room at a time, and to be able to create access to economic opportunity for people in need who have historically never had that access to opportunity. And what that looks like for me is millions of units in thousands of cities. And that's really what we set out to create, and why I made a conscious decision when I founded the company to found it as a technology marketplace, even though I had no previous technology experience, as opposed to a real estate endeavor, which was really my realm of expertise.
Interesting. Thank you. Well, this has been really fantastic. So thank you so much for your time.
Definitely. Well, thank you, Deidre.
All right. Have a good day. Thank you for tuning in to the Millionacres Podcast. I hope you liked today's show. If you enjoyed this episode, please consider subscribing through your favorite podcast provider. And if you have any questions, please feel free to drop us a line at help@millionacres.com. Stay well and stay invested. People on this program may have an interest in the deals, offerings, or services they discuss, and Millionacres or the Motley Fool may have a formal recommendation for or against. Always consult a certified tax professional before acting on tax advice, and do not buy or sell assets based solely on what you hear.